It's election time and the Conservative types in the financial markets are shaking in their boots. Labor are odds-on favourite to win. Change of government and a lot of change in rules, franking, negative gearing, lots to talk about. And to talk to me today about it is Matt Bookus from Spheria and Roger Montgomery from Montgomery Asset Management.
G'day, Matt.
G'day. Let's start with you, Rog.
Sure.
Looks like Labor are going to get in. Is that good or bad for markets? Because the general feel is it's terrible.
Well, if they got a majority, it would be, and both houses, it would be the first time since 1940 that we had a left-wing socialist government and an anti-investor government in power. I don't think that's going to happen. I think we're going to end up something closer to a hung parliament simply because of the distrust towards both parties. Having said that, I do think that we end up in a situation where a lot of legislation doesn't get through. Consequently, I don't think we have to worry that much, and we've got to remember that there's an election every 3 years.
Well, on that base, Matt, the odds are against what Roger said. Hung parliament seems like a distant opportunity. How do you feel about it, especially if Labor do actually get in, which looks like the case?
Yeah, look, it would be a much more difficult market with Labor in, given the policies they're discussing and they're promoting. But as Roger said, the legislation has to get through the Senate, and I think that would be a big stumbling block. So particularly on the franking credit side, there's a lot of self-funded retirees out there that will be disadvantaged under that scenario. I think it's quite negative for that constituent. So you could actually see a pushback as well, where I think Liberal might do better than you think.
Okay, let's go down the path, the hypothetical Labor win. We know they've laid out quite a few of their policies, so we're fairly well informed going into an election. Who wins and who loses in terms of sectors in the share market?
Oh, look, I think the banks will lose. There's a lot of capital allocated to the banks because you get a fully franked dividend. So a lot of pensioners, a lot of self-funded retirees have bank shares in their portfolio. So I think you'll see a discount applied to the banks and less capital allocated to the bank.
So who wins off the back of that?
Well, anyone short the banks probably wins, I think is the... and off that, I suppose, the property trust sector benefits because they don't pay tax. They're a trust structure. So we think there'll be money that will move from banks probably to property trusts.
Okay, Rog, have you got a different view on that, or
Well,
are you
no,
consensus?
similar. It comes down to price, obviously. I think there's a repricing of companies for the loss of the franking credits that have no value to companies, obviously, but a lot of value to recipients. So the banks suffer, but so do any companies that have a high proportion of franked dividends and/or a high payout ratio. I think another group of companies are the leasing companies, the novated leasing companies. Might remember one K Rudd said that the whole thing was a rort. The last time Labor was in, had any sort of chance of putting legislation through. So they suffer. Property developers suffer. Land bankers, property developers suffer. That consequently pushes property prices down or land prices down. But then there are other companies that will benefit from that, take advantage of those lower land prices, and ultimately long term.
Why do they suffer? Because the negative gearing stays on new developments.
The negative gearing stays on new developments, but when you've bought something off the plan, the next buyer in the secondary market doesn't get the benefit. Right. So you end up again with a lower premium. So for whether it's shares or trusts or because of the franking credits or property, you end up with a lower PE ratio, if you like, on all assets as a result of these tax changes. If they got through, remember that's the caveat. But there will be companies that take advantage of that.
Okay, so let's go the other side and stick with you. Winners then. You said people might win off the back of that.
Look, I think a company like Peet Limited, which is a 124-year-old house and land package property developer. They've been very successful navigating the cycles. They're only a $500 million company, only a small company, but they've got a long history of being successful. They've just raised some money, and I think they're raising money in anticipation of property developers going broke, not because of the structural changes as a consequence of government changing taxes or negative gearing, but because of the cyclical element anyway. And I think they benefit if property prices get pushed down even further as a consequence of Labor winning.
Okay, Matt, let's go blanket again. Labor gets in, consensus, not so much here, but generally.
Yep.
Market goes down, up, or doesn't care as an index?
Oh, look, I think it goes down, and for all those reasons discussed. I mean, some of the political strategies they're employing are quite negative for share market participants. I do agree with Roger. Novated leases looks like a real risk to us. I would not own any of those companies that provide them. I think we don't have a domestic car manufacturing industry anymore, so there's no protection required there. A lot of the people that take out salary packages for their cars wealthy people. And so I think that will be shut down. So I'd be very wary of owning those companies.
So down, come the 19th of May or the 20th or whenever after the election, you think the market will be...
I don't know the timing of it, but it'll be on the agenda. And it's been really quiet so far, which means something's going to happen there.
Okay, shock scenario, Libs get up, or coalition get up, market does what?
Relief rally. Yeah, I think that'll be seen as positive. The Liberals are obviously pro-business, pro the share market. I think it'd be a very positive outcome.
Okay, Rog, same question to you.
I think the downside as a consequence of Labor winning is a structural change, and it takes time for that to feed through. There'll be a lot of individual investors in the banks, for example, that'll be going and seeing their financial planners. They'll have to get a statement of advice. You know, it takes a long time before you see share registers change dramatically. So it works its way through over several years, not necessarily instantly. But I think sentiment's definitely negative if Labor wins. If the LNP gets up, and I certainly hope they do, I'm not going to be afraid to tell you that I hope they do. I think Labor's on an anti-investor march. So if they do get up, I think again relief rally. Agree with Matt. You know, it's a good thing. It's the status quo, which is, by the way, you know, nothing really changes. Nothing good happens either.
Well, the market's hardly moved since
indeed.
the LNP's been in.
Yeah, indeed. So I think it's more of the same, but that's better than the alternative.
It's binary, Labor bad, Liberals good.